Hi everybody, welcome back to my YouTube channel. Have you ever had an interest in financial markets but not really known where to start or been confused by some of the terminology that's been used? Well, if that is you, you're in the right place because this video is going to be a review of what happened in January 2020 in very simple terms. I'm going to go over some of the terminology commonly used in financial markets. I'm also going to talk about some of the headlines that affected financial markets. So welcome aboard and I hope that you enjoy this video. Before we proceed, let's get a couple of definitions out of the way. So when I talk about financial markets in this particular video, I'm talking about equity markets. And by equity markets, I'm generally talking about stocks and shares of companies. I'm also going to talk about risk sentiment. And by risk sentiment, I mean the temperature of the market. So generally speaking, if risk sentiment is positive, this means that equity markets, i.e. shares and the stock price of companies were going up. And if risk sentiment was negative, then it generally means that the temperature of the market was fairly low and that share prices were falling. Now, there are other asset classes where when the risk sentiment is not positive can still do very well. But for the purpose of this video, I'm going to focus on equity markets. Equity markets are sometimes referred to as risky assets. And this generally means that when risk sentiment is positive, risky assets perform well. So when risk sentiment is positive, equity markets do well. So for the purpose of this video, when I refer to risky assets, I'm talking about equity markets. Now that we've got the definitions out of the way, let's dive straight into what happened in January 2020. Before I do that, let's take a look at what happened in 2019 because that's very important to set the scene for 2020. In 2019, without a shadow of a doubt, risky assets, and by risky assets, as I explained earlier, I mean equity markets, did phenomenally well. If you had bought a fund that tracks the behavior of equity markets at the beginning of 2019, you would have done very well by the end of it. Now, equity markets or markets in general do not go up in a straight line. They go up and down and to the side at times. But when we look at periods, we look at what happened at the start of the period. So when I say equity markets did very well in 2019, I'm looking at the price level for the index at the beginning of the year in comparison to what it ended at the end of the year. And let's just say equity markets had a bumper year in 2019. So that sets the scene for 2020. Going into January 2020, equity markets did very well. They started the first 3 days rising as they did in 2019, and then we hit a bit of a road bump. I'll explain what happened. At the beginning of the year, there was some tension in the Middle East between Iran and the US. I'm not going to go into a lot of detail, but suffice to say that generally speaking, when there's any uncertainty in the market, and it doesn't matter where it's coming from, in this case it was geopolitical risk, and by that it just means that countries, generally speaking, across the globe, were potentially getting into a situation where there could be conflict. The market does not like this at all. So what we saw when Iran and the US were having an issue, and it's still ongoing, the market sold off. And by sold off, it just means that equity markets fell for a day or so. And then we had what we know as the US-China trade deal. And this has been a deal that has been in the works for at least a year and a half, where the US and China have been trying to negotiate how they do business with each other. Phase one of that discussion was concluded mid-January, and the markets reacted very positively because, again, there was one less thing to worry about. So as I said before, it's all about risk sentiment. How do the people who are invested in the market feel about the temperature of the market? So when it's positive, generally speaking, equities do very well, and people don't like uncertainty. So when something is bubbling under the surface, for example, Iran-US or the US-China trade deal, talks are ongoing, the market is very, very unsure about what direction it's going to take. Generally speaking, in equity markets, companies will tell us how well they think they're going to do for the next quarter. At the end of that quarter, then they'll tell us how well they did. In January 2020, companies told us how well they had done in the last quarter of 2019. So we have lots of companies who are telling us what they do, but the market gets very excited about specific companies. And as you can imagine, these tend to be the large banks, technology companies. So we had reportings from these companies. We had Tesla that came out that did very well. We had the US banks, which generally speaking did very well. So we had Apple that did very well, the iPhone 11 reporting an increase in sales, and the AirPods doing very well for Apple too. I'm going to talk about specific companies. Alphabet, Google's parent company, is the latest company to join the $1 trillion club. There are 4 companies that are currently in that club. So Alphabet was set up by Larry Page and Sergey Brin in 1998 when there were 2 students at Stanford University, and it's now part of a $1 trillion club company. For all you detail geeks out there who would like to know who the other 3 companies are, they are Amazon, Apple. Microsoft was a part of that group but has recently fallen out. So that's a summary of what happened in January 2020, but also just to touch on a few other headlines which you should be aware of. So we had the Lunar New Year in China. This was the year of the rat. And the reason why I specifically mentioned China is because of the coronavirus, which has started in Wuhan. Now this virus is still ongoing. There's a lot of information that's being released every day, and it's a human tragedy. But in terms of financial markets, there's a great amount of worry about the impact on the output of China, because China is a big part of the global economy. And by that I mean that their demand, what they consume in China, has a big impact on what's needed to be produced by the rest of the world. So as you can imagine, if people are not traveling as much, not leaving their homes as much to buy as many items, this will have a great impact on demand. So we'll have to see how that story pans out, and that probably will be for February and March and ensuing months. Then we move on to the Donald Trump, the US presidential impeachment trial. That is ongoing, and generally speaking, the markets think that Donald Trump has done a very good job in terms of the US economy. So if there's a possibility of him not being impeached, this is bound to be received very well. The trial is still ongoing in the US Senate, so again that will be one to watch for February. Brexit Day in the UK. So Boris Johnson, UK Prime Minister, and the EU are setting out how they intend to approach the negotiations over the next few weeks and months. Finally, to cap off this video, we had 2 central bank meetings which should be noted, and that's the Bank of England and the US Federal Reserve. Now, a central bank, generally speaking, is very important to the sentiment of equity markets or risky assets, because they have the power to raise and cut interest rates accordingly depending on what's going on in the economy. A summary of what happened in January: equity markets started off the year very strong but ended the month weaker on concerns of the coronavirus and whether this will be contained, especially as the World Health Organization declared this an international emergency. Again, going back to the start of my video, the market does not like any sort of uncertainty. So when there's something out there where people are not quite sure how it's going to pan out, it tends to have a very negative impact on risk sentiment. So watch out for my next video, which will talk about my views on what I think is important for February 2020. And I hope you've enjoyed my summary for January 2020. Thank you. And until the next time, goodbye.